Hi guys, this is Mark Shawson, the Pattern Trader here, coming to you before another week of trading. In the week ahead, we have the ECB Chairman Mario Draghi speaking tomorrow, Monday. And then on Wednesday, September 26th, we have the FOMC meeting where it's widely expected that the U.S. Federal Reserve will raise interest rates one more time. What traders will be focusing on will be the comments thereafter as to how hawkish or dovish the Fed is inclined to be going forward. There's about a 60% chance of another rate hike planned for December, and the market participants will be honing in on that. We've had a 3 or 4 month run up in the US dollar, but about 4 weeks ago, based on a key reversal price action on the weekly chart, I started to suspect that we would see some downward pressure exerted on the US dollar, and that's what we have, especially in the against the euro. The euro's rallied from about 113 to about 117 and a half, and I do see some more legs left in this euro rally to perhaps the 119 or 120 price level. But generally, I think US dollar trading is going to be uneven. I see the dollar pretty much neutral against the New Zealand dollar or Australian dollar, neutral against the pound. I'm monitoring the price action in the dollar yen. We're at a resistance area around the 113 area in dollar yen, and I'm kind of monitoring prices there, but not a lot to write home about in US dollar trading. Where the big action was last week was in the British pound correlated pairs. On another fear of a hard Brexit, the pound reversed and dramatically declined to close at the low end of the week against most of the pound related pairs. And I think that there was extensive technical damage in some of these pound related pairs, including the pound New Zealand. Now, you guys know that I've been touting the upside of pound New Zealand. And last week we made a multi-year high. We crossed over the 2,000 mark, but I fear that this may be a bear trap by virtue of the trading action last week, where we made new highs and then collapsed about 400 or 500 pips lower. So that could have been a bear trap just above the new highs, and I will be monitoring price action accordingly, but I suspect we may have some damage in the British pound pairs, and there may be some downside on pound Australia, pound Canadian, pound Swiss in the near term. But generally, not too excited about FX trading right now. Typically, we see the July, August, and September timeframe, still pretty difficult, choppy, range-bound, random price action, and we still, see that going on. I expect that all the way perhaps up until October, or maybe till the midterms are resolved in the United States in early November. But there is an emerging opportunity that I'm seeing in the Nasdaq Tech Stock Index. While the Dow made new highs last week, the S&P made new highs, the Nasdaq fell short of its highs for the third or fourth week in a row. And I'm looking at some individual stocks like Google, like Facebook, like Nvidia, that seem to be indicating some bear patterns. So I'm going to be monitoring that and keeping you apprised. I did make a special video report on my thoughts in the NASDAQ Tech Index, and perhaps I'll have my team attach it with this video. But until next time, I'm going to be monitoring the action in the Tech Index and keeping you apprised there. So have a great rest of your weekend, and I'll be speaking to you tomorrow. Hi guys, this is Mark Shawson, the Pattern Trader here with a special video report on one particular stock index that I believe is starting to flash some red sell signals. Before I dive into that, let me go ahead and just review what's going on in the US stock indexes. This chart, I'm looking at the Dow Jones Industrials 30. This is a weekly chart. And as you can see, this week we are steaming to the previous highs set back in February. So everything looks good. Everything looks like it's consistent with the long-term 8-year, 10-year bull market we've had in the stock market. And the Dow Jones looks like it is steaming to meet or make new highs. Similarly with the S&P 500, we have the same situation where the market this week is steaming and sitting at all-time highs for the past several years. It exceeded the February highs and has gone on to make new highs, and all looks good there. But now when we look at the Nasdaq, we have a completely different story. Now the Nasdaq has gone ahead and made all-time new highs well ahead of the Dow Jones or the S&P 500. You can see here that we exceeded the February highs a long time ago in the Nasdaq, whereas the S&P is sitting there right now and the Dow Jones is just short of these February highs. And the Nasdaq went ahead and exceeded those highs. But now, whereas the S&P and the Dow Jones still look strong, we see that the Nasdaq for the last 3 weeks has been unable to make new highs, and we've got this sloping downtrend line and this kind of box going on here with this descending triangle. In addition to the sloping downtrend line connecting all the recent highs where we have lower highs over the course of the last 3 or 4 weeks, we also have a long-term trend line that we seem to have peaked against. And now my thinking is that we're going to retrench back to at least this primary line and probably this secondary trend line, which then should mean that the Nasdaq should come back to at least the 7,300 level and more likely to about the 7,000 level on this current trajectory. So now I'm going to look at a number of stocks and a number of indexes that are corroborating my thinking that we have this non-confirmation that the S&P is now steaming to new highs, Dow Jones is on the way to its old highs, but the Nasdaq looks like it's stalled out here. So we have this non-confirmation, and there's something in my water that I'm getting the feeling that we're going to roll over in this tech sector pretty soon. In this chart, I'm looking at the QQQs. This, again, is a proxy for the tech index, and it's a instrument that is most used to go long or short using options if you want a proxy on the tech index. As you can see, we are trading live right now. And I'm going to do a screen capture and show you what I'm seeing on this chart currently. So this may be an early call, this may be a premature call, but what I'm seeing is the potential of an early double top being traced out currently in the price action of the QQQs. Now, probably one would be better off to wait for penetration of the neckline to confirm this double top, which comes in just a hair above the 180 level. We're trading just above 182, but again, it looks like we could have the beginnings of what appears to be a double top price formation in the triple Qs that again is a proxy for the Nasdaq. Now I'm going to show you some individual stocks, some important individual stocks within the Nasdaq that to me are flashing big red warning signs. In this chart, I'm looking at the stock of Amazon, ticker symbol AMZN. This has, of course, been the big bad bull signal for the Nasdaq for the past 7 or 8 years. We've torn to new highs. We recently went over the 2,000 mark. But if you look deeper within the recent price action, we see what looks like a nascent early beginning of a double top price pattern that we saw in the triple Qs. Now this did briefly pass below and then above the neckline, and you can see now that we are re-threatening this neckline at about the 1900 level in Amazon. You can see again we have these two prominent tops above the 2000 area, and again it appears that this stock could be ready to roll over, and perhaps big time in the near future. The other granddaddy of the Nasdaq stock index is Google, ticker symbol GOOG. And similarly with Google, I see a very bearish price pattern in the form of this triple top at or near the 1260 area that formed a couple of weeks ago. Now, Google has penetrated beneath the neckline. The neckline is simply a line that is drawn through the entirety of the pattern. And you can see now we formed this rounding top below the neckline of Google. And now we formed another neckline near the 1160 area. So again, any penetration below here could open up much lower prices to come in the next several days, weeks, and months going forward. Another stock that is flashing red warning signs is the stock of Netflix, ticker symbol NFLX. And a couple of months ago, we had this very prominent double top at about the $420 area with the neckline running around the 380. You can see that we've recently run up to retest this neckline, and now it feels like we're getting some resistance at this 380 area, culminating today with what appears to be a key reversal where the stock initially made new highs and now has reversed and appears to be going lower. We're far from today's close, so we'll have to see how it closes. But again, taken all together, it appears that the halcyon days for the Nasdaq may be coming to an end for the next short while, or perhaps for the next long while. I'm going to finish up my analysis by looking at the chart of Facebook, ticker symbol FB. Now you can see that Facebook looks to have formed this prominent reverse triangle, and we've broken well below that, and we've been in some kind of bear market for quite some time in Facebook. So again, all taken together, it looks like these important stocks have either topped out or in the process of topping out, and we could be in the process of a new emerging trend as I depicted in the Nasdaq chart, where we're going to get a retracement back to the primary uptrend line, which would mean that some of these important stocks have a lot of room left to go lower. So I hope you got a ton of value out of this video. I will keep you apprised of my thoughts going forward, and I wish you a healthy and prosperous trading day.